All right, let's go ahead and get started. Welcome to the Columbia Chamber of Commerce's weekly webinar. I'm Matt McCormick, president of the Columbia Chamber. I'd like to remind everyone that this program is being recorded and will be available on the Chamber social media pages and on the Chamber's COVID-19 resource page located at columbiamodechamber.com following this event. If you have not done so already, please mute your microphones so that our guest speakers can be heard easily by everyone on the call. We'd also like to know who is joining us today on the call. We'd like to know who is joining us on our call today. So if you wouldn't mind, take a moment and please type the name of your business or organization into the meeting chat. There on the side, as you can see the instructions on the screen. And lastly, if time allows, at the end of the webinar.
This will be Senator Blunt.
Is now joining.
And if time allows, at the end of the event, we will take some questions via the meeting chat. So if you have questions as our speakers are speaking, just type those into that meeting chat and we'll ask those at the end if time allows. Today we'll be discussing the federal coronavirus relief package, phase 2 and phase 3. For those of you who may not be familiar, phase 2, known as the Families First Coronavirus Response Act, was passed about a week ago and increased unemployment benefits and eased the requirements for getting and keeping unemployment benefits, and included a refundable payroll tax credit for paid sick leave and family and medical leave wages paid to employees that are affected by the COVID-19. Phase 3, the coronavirus.
Leanne, can you?
Phase 3, the Coronavirus Aid, Recovery, and Economic Security Act, also known as the CARES Act, was also passed at the end of last week and has provided different types of loans for businesses to stay afloat, such as a payroll protection program, as well as other tax credits or deferments for employees. So today, joining us on the call to discuss these phases are Senator Roy Blunt, as well as District Office Director with Senator Blunt's office, Sarah Barfield Graff, and we also have Jack Howard, Senior Vice President of Congressional and Public Affairs for the U.S. Chamber of Commerce. I'd like to thank you all for taking time to be on this webinar this morning and welcome. Again, for everyone attending, please be sure that your microphone is muted throughout the duration of the webinar. If you have any questions, please use the chat feature to submit them. Senator Blunt, are you on the call?
I am, Matt. Good to be with you this morning. Senator,
thank you so much for taking time. And before I hand this over to you, I also want to tell you thank you for fighting for and for all that you do in DC for Columbia, Boone County, and all of our Missouri businesses that you take care of. So with that, I'm going to turn this over to you, and thank you for your time today.
Well, I'm glad to be with you. I'm glad Sarah Graff is on the phone. I think you said Jack Howard from the U.S. Chamber, who has done a lot of work with the Treasury Department trying to be sure that the small business part of this work is also, I think, on the call. Let me just say on this topic generally, I chair the committee that funds the National Institute of Health and Health and Human Services and hospital efforts and the research efforts and the infectious disease part at NIH that Tony Fauci has headed for a long time. As well as the Center for Disease Control in Atlanta. So for weeks now, I've been talking to them about what we needed to do to get ready and the lack of performance when there was some of that, and the challenges in a big country like ours of trying to get a hold of this, and frankly, the importance of governors and local officials in deciding, in many cases, what works best for their community
is now joining
at any given time. But let me go through the bill we passed the other day. This is the third of the coronavirus bills that the Congress has already passed. The first one was just set up to provide more money immediately for the federal government reaction. The second one was almost totally focused on sick leave and time away if people had to leave their jobs, and how we'd work with employers to compensate them for that time away. I think that was about $8 billion. I may be wrong on that. These numbers get so big, but the third one which started out at 1.2 trillion with the Republican Senate idea of what we could do, eventually turned into 2.2 trillion by the time the White House and the Speaker and Senator Schumer negotiated on a bill that would get passed and get on the president's desk and the president would sign. If anybody's taking notes, I would think the 4 areas to take notes on would be 1, the direct payments, 2, what the bill does for small business, 3, what it does for critical industries, and 4, what it does for healthcare. The 4th part of the bill is a part of the bill that my staff and I were largely responsible for putting together and appropriating money for hospitals and other healthcare measures. Probably some hospital people on this call. I've spoken to almost every hospital, somebody from almost every hospital in Missouri in the last 2 or 3 weeks. Now, one reason for that was that the Missouri Hospital Association put together a very helpful phone call, and a couple of things in this bill directly related to what I learned as part of that phone call. But there'll be nationally about $100 billion for hospitals. Part of that $100 billion will try to make up for the elective work that didn't occur as hospitals all over America stood back and tried to, 1, save their personal protective equipment, and 2, not utilize the hospital as they were trying to restructure it in many cases to get it ready for these coronavirus cases that need to be isolated. So we're working with HHS, the Health and Human Services Secretary Azar, and CMS, which is the group that works with the hospitals right now, to try to create a cash flow will be similar to the cash flow that those hospitals would have had if they would have been working at last year's level. And, you know, many of our hospitals in Missouri struggle. They'll all struggle, frankly, if they step back from the work they would normally be doing. We can come back to that more if you want to, but there's a big healthcare piece. My staff knows a lot about this. I know quite a bit about it. I'd be glad to talk about that. But let's go back and start with direct payments. The idea of direct payments initially would have started out as a way to energize the economy. I'm not sure that's ever worked all that well as a stimulus to the economy, but I am sure that lots of people and lots of families need money right now for things that they wouldn't have expected to need money for. Figuring out what to do with kids when they're suddenly out of school, extra medical expenses. If you have somebody in your family who's sick, trying to deal with somebody in your family who's sick, who doesn't necessarily have coronavirus, but it's more difficult to deal with whatever they do have because of the limited access to doctors' offices and other things right now. But those direct payments will be about $1,200 for an individual who made less than $75,000 last year. Most Missourians that filed a tax return will get that direct payment, and they'll probably get it by mid-April. Initially, the Secretary of the Treasury, as we were putting this together, said he hoped to have the checks out by April 10th. And yesterday said they'd be out within, the day before yesterday, within 3 weeks. So mid-April is probably about the right time. And I said the checks will go out, but what will really happen is most people who filed a tax return and on that tax return filled in the spot where it said, here's where you should send my refund if I have one, that's where that money will go. That money will go to that account. It'll be in your bank. You'll probably have to check and see if it's in your bank between now and the time you get your next bank statement. I don't know that there's any other notice that goes out, but the Secretary of the Treasury thought, and I think rightly, this is the quickest way to get money to people. In a traditional family of four, if you have 2 adults and 2 kids, and you make less than $150,000 at your household between the 2 adults, each of those adults would get $1,200. Each of those 2 kids would, for the family, would get $500 for each of them. So 1,200 times 2, 500 times 2, that's $3,400 that would go to a traditional family of 4 by mid-April. $1,200 goes to somebody living by themselves who has a tax return on file. And if you don't get money that way, there'll be plenty of notices that go out how to go ahead and apply for funds there, because it'll go to almost every Missourian at some level that makes less than $75,000, and the cutoff amount is right at $100,000. So if you make more than $100,000, you're not going to get any money through this program as an individual. But if you make between 75 and 100, you'll get just a little less of that $1,200 on a scale that they'll be working from. For small business, there's around $350 billion available for small business, and that's largely available in the form of forgivable loans. And those loans you go to your local bank is the first best place to go. Check and see if they're an SBA approved lender. And for this money, you don't have to go through the things you would normally have to go through to get an SBA loan. You just have to be applying through this program. And in order to get your loans forgiven, you have to have maintained all or some of the payroll that you had on February the 15th. Now, all these dates might vary a little bit, and if your lawyer or your accountant is telling you that's a different date than you're writing down right now when you're talking to me, your lawyer or your accountant has probably seen the final rules and I'd rely on them. But I think we're going to be pretty close in this discussion to what you're going to find when those rules all finally come out. This is different than any other federal loan program. If you've got another federal loan, or even if you've taken out another small business loan in the last 2 or 3 weeks, it doesn't prevent you from having access to this money. That money should be available maybe as early as Friday. The SBA website will have all of the information you need on Monday, but I think the money may be available, you working together with your banker, as early as Friday. Small businesses, not-for-profits, tribal businesses, not a big issue in our state, but small businesses, not-for-profits, tribal businesses, people who are self-employed, people who are independent contractors, people who are sole proprietors can all qualify for this paycheck protection assistance. But to qualify, you have to have less than 500 employees. And again, that date could vary, but I think the date they're going to look at is February the 15th. And there'll be some things that you could qualify for besides paycheck. Let me mention one other thing. There's some travel that is different than some travel places, like hotels and restaurants. maybe can probably apply on a per location basis. So if you have, for instance, Hyatt Hotel, even if it's being run by Hyatt Hotel, they may be able to apply for each individual hotel to try to maintain that payroll. Certainly, if you have a Hyatt Hotel, and could be any brand, I'm just came up with that name, and it's a hotel that you run, you operate, you just have the franchise and the sign. As long as you have less than 500 people in a location, even if you have 3 locations that might have more than 500 people, you probably still qualify for this small business, less than 500 employee effort. It could be retroactive to February the 15th, so you could go back and even recapture in this loan money that you've already paid in payroll. The total loan can be as high as $10 million, and it covers all your employees who make less than $100,000 if you meet the criteria. The loan forgiveness actually would begin 8 weeks after you initiated the loan, if you could then go back and prove that you had done everything with the loan that would make it a forgivable loan. The fourth thing, which I don't think we're going to talk about unless somebody wants to, would be the critical industries part. That's also about $350 billion. $50 billion of that went to airlines. And again, they don't get it forgiven, parts of it, but they need to keep their part of it for airlines, frankly, is forgiven. They just have to keep their staff in place until the middle of September. And I talked to a couple of aviation the airline companies yesterday. They're down about 90% in the number of people traveling and about 70% in the number of flights that are out there. So if they keep all of their people on the payroll with that kind of a work reduction, it'll be a big challenge for them. And one of the reasons that part of that critical industry money for them is to help them keep people at work. So, Matt, I don't know exactly how you want to do this, but I'd be glad to try to respond to any questions now, and I'll try to keep those responses as brief as I can. But that's kind of the overview. Again, direct payments, small business loans, critical industries. There are probably some state and some local government officials on. There's money that goes to the states for coronavirus expenses. That might later change, but currently that money would only be available for coronavirus expenses, and you'd get that money through the governor unless you're a political subdivision of 500,000 people or more, and then you could apply directly for your proportional share of the state's money. So direct payments, small business, critical industries, and healthcare are the 4 big categories, and I'd be glad to answer questions or hear about concerns that you have. I'm sure this bill is not perfect. I hope phase 4 doesn't become another $2 trillion commitment from the federal government, but I'm sure there'll be a phase 4. There'll be enough things that we didn't think about in the requirement to get this done in a timely way that there'll have to be some modifications made, and I'm glad to hear the start of that discussion if anybody wants to talk about some obvious problems they see that I didn't see or other members of the Senate and House didn't see.
Senator, thank you so much for your time. We do have a couple questions, and we're also going to encourage anybody that might have a question to submit into the chat, if you would, please. One of the questions we did want to ask, as you've been going through this and as you've been talking with the business community around the state, are there any type of pitfalls that our businesses should watch out for and be looking for as they're walking through this process that you could give them any advice on?
Well, if you want the loan to be a forgivable loan, I would be absolutely sure that whatever you're spending the money for meet the criteria that somebody besides you has thought was the criteria that could be met. Fundamentally, thinking about this as a paycheck protection program for employees that make under $100,000, that may be about all you can deal with, but there are also ways here that you can deal with your other ongoing expenses. You know, many businesses in the country and a number in our state have no income. They just have outgo. Yeah. And you know, not just your employees, but some rent, some mortgage payments, maybe even some interest payments on other business loans that you have previously acquired and would have easily been able to pay. You and your banker believe if your flow of income had stayed what it had been for years or maybe decades, could qualify for loan forgiveness here as part of that $350 billion. And so I'd be thinking about that and, you know, reaching out. There are 1,800 SBA approved lenders in the country. There are a number in our state. That may be expanded. You know, the Treasury Department is very interested in creating as many front doors to this money as they can create. Mm-hmm. But next week, I think the front doors will all be the 1,800 SBA approved lenders that can start getting money into your checking account by this time next week.
Wonderful. Thank you. We did have one question from somebody, and I think it is going into the portion of the funds back to the individuals. If people have moved banks since their last filing of taxes, that would be something that they would need to go through the appropriate channels that you were talking about to put in their information for that.
It would, and I'm not sure I know exactly what those appropriate channels are, though I'm sure that they're posted. There'll be a Treasury website and an IRS website that tells you how to do that. I don't believe you would have to have filed this year's taxes for money that went to the information currently on file to go to the bank you would have used for last year's taxes. And of course, if you no longer have that account, your bank is not going to be able to accept the money and put it in your account. Okay. If you have an account that you still have an open account that you're not using, but would be the account that Treasury had on file, my guess is that money would go into the account that Treasury has on file that's still an active account as far as your banker is concerned. Okay. And there'll be a few people that will get their money in an account that checks from that account are somewhere in their in one of their drawers at home or in their desk drawer that well, I think I've almost closed that account out, but I haven't officially closed it yet, and that money may go there.
Okay, wonderful. Thank you. 1 second. Sorry, my computer just shut off. Senator, one last question before we let you go, and I know you do have to be somewhere else, and Sarah's going to be staying online with us to answer questions at the end. Is you know, most of the relief things that are going on at this time are immediate relief. Looking at phase 4, you talked a little bit about phase 4. So one of the questions is, phase 4 going to be looking at more of a future relief funding. What are some of the things that you're seeing on that might be in there that you can hit on quickly?
Well, Matt, I don't think we really know yet, and I hope we don't rush into phase 4 thinking we know what the country is going to look like 8 weeks from now. This package is mostly designed to be a 8 weeks and in some cases 4 months. Some of it lasts through December 31 of this year before it just goes out of existence. I think we don't know. We don't know how the virus is going to react. We don't know with any degree of certainty whether the summer becomes a much less active period of time. Now, we do know that most coronaviruses, summer, the hot weather has created quite a bit of relief. And if it does, I'm sure everybody would like to see the economy started up again. The president would particularly like to see the economy started up again if you listen to him day in and day out. By Memorial Day or something like that. You know, right now we're sort of in a 1st of May before we want to reevaluate extending stay-at-home orders and other things, at least at the federal level. Some states have already gone to June 1. I think Virginia and Maryland have both gone to June 1 already as their stay-in-place social distancing. So let's assume that's right. June 1, you know, if we're back in business, we don't need the kind of help we will need if we're not back in business. And I think there's a good chance that hot weather will make a difference. That's only Singapore has had an outbreak that they have managed fairly well, even in 80-degree weather, which argues a little bit against this acting like all other coronaviruses have acted. But let's assume it acts like other coronaviruses have acted. You get to June 1, you have what would be more or less a normal summer and early fall activity. And then we'll see where we are by the time cold weather comes again. Some people will have had this. We believe if you've had it, there's likely to be some level of immunity, maybe not total immunity, but it wouldn't hit you as bad the second time as it did the first time. By already coming up with some therapeutics that will work in the fall that we maybe are beginning to work right now as FDA is trying to qualify some drugs that have been used successfully for malaria that appear to have some helpful effects on this. Johnson & Johnson hopes to be in individual trials on a vaccine by September 1. If they're in individual trials by September 1, that might mean that we'd have an actual vaccine by the time weather gets really cold again in January. If we had a vaccine in January, it would be the fastest vaccine ever developed in the United States of America. A 12-month effort to develop a vaccine would be a new record, but we might set one. And so things might change pretty dramatically here. Mm-hmm. People have had this who don't know that they've had it. And if you've had it and you're over it and you get a test, that test will show negative that you don't have it. They won't show that you have had it, though I keep reading the likelihood that by summer in any routine blood test, one of the things they'll likely check for, certainly if you ask them to check for, is could you check and see if I've had COVID-19? Yeah. And that routine blood test would be able to tell you that, yes, you had it. And I think generally that's good news if you had it and you're over it, that you may be immune to it. If you're not immune to it, you're likely to be less impacted by it than if you hadn't had it earlier. But frankly, just most people that have had it may not know that they've had it. And obviously it's more deadly than any flu we've seen in a long time. They were talking Sunday of 100,000 plus deaths. I think the biggest flu year we've had in the last 10 years has been 70,000 deaths. An average flu year is 35,000 deaths in the United States. And so at any level, this is projected to be more impactful on life than anything like it we've seen in a long time. And I think we're pulling out all the stops to try to find the therapeutics, try to find the vaccines, and try to find a test that's helpful to a community leader to decide exactly what level of community business and social activity is right for Columbia, and that might be a totally different level than would be what would be right for Hot Springs, Arkansas, or even Cape Girardeau, Missouri. And that's one of the challenges our governors and our local mayors and city councils and county commissions are dealing with.
Yeah, well, thank you, and we thank you for all that you're doing, and keep up the good fight, and appreciate your time today. We know that you're very busy and you're having to run off to another meeting, but we do appreciate your time. Thank you so much, Senator.
Well, if you're trading Sarah for me, I'd say that's a trade up. So I'll leave Sarah with the hard questions.
This is Jack Howard. Before you get off, I just wanted to say thank you on behalf of the United States Chamber of Commerce, all of us, because you played a really key role in making this bill better than where it started. And we were pretty satisfied with the original McConnell draft, but what you did on appropriations and also what you did on improving the liquidity for this thing is going to go a long way to make this much more effective program. So before you run, I just want to say thank you.
Well, thank you, Jack. And your efforts personally, particularly on the small business part of this, have made and will continue to make a difference, and grateful to the chamber generally around, including our local chambers, but also to the work you've done to try to get this small business thing working as quickly as possible so that people will have doors that they'll still be able to open for business when we get back to a more usual way of doing business. So thank you all for letting me join you, and look forward to seeing you in person in Columbia soon.
Thank you, Senator. Appreciate it, and stay safe. That's a great segment, Jack. I'm glad you hopped on there. Again, before we move over to you, Jack, real fast, I want to remind everybody, please, to mute your microphone.
This will be Senator Blunt.
Is now exiting.
Please mute your microphones. And
is now exiting.
If you have any questions, please type them into the chat feature. Also, we're trying to track and make sure we know who all's on the call. If you would take a moment, put your company name or your organization name in the chat feature as well. We greatly appreciate it. So next, I'd like to welcome Jack Howard with the U.S. Chamber of Commerce. But before I turn it over to you, Jack, I want to say thank you. The U.S. Chamber as a whole has y'all have been a constant, reliable source of information for, I know us, the Columbia Chamber of Commerce, as I sit on those conference calls 3 times a week with y'all, but then also to our business community has been a wonderful and constant and reliable resource for us all. So thank you so much. So Jack, I'm going to turn this over to you, and I believe you have a PowerPoint that Whitney's going to load up so that everybody can see. There it is right there. And Jack, I'll turn this over to you.
Great, glad that all worked. And again, thanks.
+12028215185 is now exiting.
Sorry, go ahead, Jack.
Anyway, so thanks for having me, let me participate here. And I appreciate your kind words, but look, we're happy to do whatever we can do to help you and businesses in Missouri and across the country. You all are on the front lines of trying to make this thing work. So whatever we can do to move this forward, we will do. Senator Blunt hit, obviously almost hit the key points of the framework of the legislation. So I'll try to avoid kind of duplicating kind of what he went over. I did want to just make a couple of points on the individual portion. He talked about the direct deposits for people, $1,200 per individual, $2,400 for a joint return, $500 per child. But the bigger, I just want to kind of underscore what he was getting at, which is one of the original versions of this bill was only $8 billion. And I think that was about a month ago. So we're now talking about a bill that's over $2 trillion. So that gives you a sense for how rapidly the response to this crisis is evolving. The other thing I just wanted to remind people of is even though it's $2 trillion, it really provides the Fed the capability to leverage an additional over $4 trillion in support of the economy. So this is going to be a powerful boost to the economy starting, we hope, this week. The other thing I just wanted to mention for people too is the unemployment features. A lot of those provisions have been relaxed. We're hoping we don't have to continue to provide more unemployment to people, of course, but that's just a fact of reality as we are. I think we all saw last week there were 3 million unemployment claims just filed as of last week. And I saw projections this morning that the unemployment rate for the country could go as high as 30%. So the stakes are pretty high here. We hope we don't get to that point, but for people who do find themselves in that situation, it's important for them to understand that the way this program works, a lot of the eligibility restrictions are suspended if they're related to the coronavirus crisis. So like if you have, how long you've waited for, under the normal programs, you have to, meet certain criteria, how long you waited, how long you've worked, that sort of thing. Those no longer apply. The other key point is they get an additional $600 per week on top of their regular state benefits, but that ends on July 31st. So there was some concern during the Senate debate that giving recipients an additional $600 would result in them not having much of an incentive to go back to their regular job. That's not a concern. It ends on July 31st, and it ends when the individuals can actually return to work. So I wanted to point out that in terms of the individual portion. In terms of the employers themselves.
Hey, Jack, this is Matt McCormick. Can I interrupt you for a second?
Yeah.
Sorry about that. We have a couple people that apparently their microphones aren't on mute. If you would, please make sure your microphone is muted so that we can hear. It sounds like someone is driving possibly or something along those lines. So if you would, please make sure your microphones are muted. Thanks, Jack. Go right ahead.
Okay. All right. So where I want to spend most of my time is obviously the impact on employers and the business community. So a couple of main points here. The idea here behind this whole bill is to keep this in mind as we move forward. The whole philosophy here is to provide a bridge for employers to avoid a prolonged deep recession. And really, it's all about trying to buy time until businesses and employees can either remain open, if they still can, or reopen as expeditiously as possible. So that's the fundamental philosophy behind the whole bill here. So in order to do that, for all employers, there's a series of tax changes. We'll talk more about this going forward. There's a new employee retention credit. For larger employees, there's a whole array of loans, loan guarantees, Federal Reserve credit facilities that are going to be made available here, we hope, as soon as the end of this week. And then in particular for small businesses, people who are independent contractors, nonprofits, self-employed, there's a new program called the Paycheck Protection Program, which I'll describe how that's supposed to work. They're also expanding the existing SBA economic injury disaster loans called EIDL in a lot of ways that, again, will encourage fluidity or liquidity. And then for people who, individuals who are having to deal with taking care of their children or family members, there are elements of paid sick and family leave. So let me start with all employers as a whole. The key thing here, payroll taxes, employers would have the option to delay the employer version, not the employee, employer portion of their payroll tax between now and January 1st, 2021. That's the option. If they choose that option, they have to pay 50% of the accumulated amount that they would have owed by the end of 2021. So that's December 31st, 2021. And then the remaining 50% would have to be paid by 12/31/22. But the important thing is to keep in mind, if you have a loan under the new Paycheck Protection Program, you cannot delay your payroll taxes. So that's an important thing to keep in mind if you're thinking about doing that. But here again, the overall goal is to increase liquidity for businesses who have no revenue or who have lost significant amounts of revenue. Not really about reducing taxes. It's more about changing the timing of payments so that they have the liquidity to continue paying their employees. There are several key tax features that we fought very hard to get included in terms of business losses. The CARES Act expands the ability to use losses, net operating losses, by removing the current 80% income limitation on the use of those losses for tax years beginning before 2021, and by permitting those net operating losses in 2018, 2019, and 2020 to be carried back 5 years. In the area of business tax deductions, the bill increases the amount of deductible business interest expenses by easing the current limitation from 30% to 50% for tax years beginning in 2019 and 2020. And it also allows them to use that to determine their 2020 business interest deduction. In terms of what they call the qualified improvement property fix, we call that the retail glitch. It turns out in the 2017 tax law, Congress inadvertently excluded improvements to non-residential buildings from the 100% bonus depreciation. So mostly restaurants and things like that were unable to take advantage of that. So this bill fixes that particular provision. It also provides provides eligible employers a refundable tax credit against payroll taxes equal to 50% of the first $10,000 in qualified wages from March, I believe it's March 13th, 2020 through the end of 2020. And it allows employers to delay for up to 2 years making payroll tax payments that would otherwise be due, as I mentioned earlier. We talked about the individual tax rebate. That's a key feature as well. So that's a summary of the major employer tax benefits in this bill. I talked about the employee retention tax credit just a second ago. In order to qualify for that, employers who are fully or partially shut down have to have a 50% drop in gross receipts in a quarter compared to the prior year until they're able to resume resume revenue to 80%. Again, this is designed to help employees who have shut down or have lost revenue who continue to pay expenses. There are special rules, however, for employers who have more than 100 employees. So if you're shut down or partially shut down, you can still take advantage of the credit if the employee is not working or teleworking, not providing services, but you still pay them. That, like I said, applies to employers who have more than 100 employees. For businesses with fewer than 100 employees, the requirement that they are not providing services does not apply. It's available to all employees during the eligible period. And Treasury, as I understand it, is working on guidance to allow the advance payment of that credit again, to try to increase employers' liquidity. So moving on to mid-size and larger employers, there's a number of key features here too. Senator Blunt talked a lot about this particular section. Again, for employers with more than 500 employees, the purpose is to provide support through existing and new Federal Reserve Board credit facilities. So we're talking about commercial paper, money market funds, things like that. This was a device used a lot in 2008 and 2009 by the Fed to inject liquidity into the economic crisis at that time. Key point is there's $454 billion for business as a whole. Senator Blunt mentioned airlines and other distressed industries that would make up the rest. So it's $500 billion basically to inject more liquidity into the system as quickly as possible. Policymakers, lawmakers are not expecting companies to go directly to the Fed to apply for these programs. The money will go directly to the lending institutions for them to make loans. So again, it seems like that's the quickest, most efficient way to get money back into the economy as soon as possible. For small businesses, self-employed people, independent contractors, nonprofits, this is probably getting the most amount of attention among our membership and kind of in general. Senator Blunt talked about the Paycheck Protection Program. Here's the way that works. First, if you are already qualified under the SBA 7A program, you're automatically qualified. In addition, some businesses like restaurants and hotels have been added. This covers independent contractors and self-employed people. And for hotels and restaurants, as Senator, there's a little bit of a complication, just by given the nature of their business. It's based on their per location. For those people who are, I just want to don't assume that because you're not eligible for a 7A program, you're not eligible for any of this assistance, because there are certain circumstances under which you could be. So you could borrow, under this program, you could borrow up to 2.5 months of your average payroll, and there's a formula that SBA has in terms of how you determine that, up to $10 million. Basically, you take that formula to calculate your average payroll and then multiply that by 2.5 times. Where do you go for that? This is not an SBA program. You go to your local or national lender. They are automatically qualified. The requirements are very minimal. You don't have to have any collateral, no personal guarantee. It's interesting that the loans would convert to actual grants amount to what you spent on payroll, rent, interest, mortgage interest, and utilities for the 8 weeks after the origination. There are a couple of important conditions that you should be aware of. If you reduce your full-time employees, your FTEs, or if you reduce wages by 25% for employers making less than $100,000, that loan is then reduced proportionally. It's the goal here is this feature is aimed at preserving the wages of mid and lower income employees. And it goes back to where it kind of started. The whole principle is to incentivize small business in particular to keep paying employees regardless of whether they're actually at work. If you're shut down or if you've been declared a non-essential business, that doesn't matter. The real key question is, after you took this loan, were you still paying employees? So that's what the criteria is. And I think if you can get to the slide there where you learn more about the Paycheck Protection Program, we have a handy guide that you can, if you go to that website, www.uschamber.com/SBloans, will tell you just about everything we know or need to know about how this program works. I highly encourage you to do that. So continuing on to small businesses, self-employed, independent contractors, nonprofits. I mentioned before the existing economic injury disaster loan. This is already a program. It's an actual loan. There are no restrictions, and it's actually very easy to apply. It's for small businesses and nonprofits, including faith-based, with fewer than 500 employees, sole proprietors, and independent contractors. You can get up to $2 million worth of working capital up to 30 years at an interest rate of 3.7%, 3.75%, or 2.75% for nonprofits. The payments are deferred. The payments are deferred for a year. Loans are based on your credit scores, so you don't have to go through, finding tax returns or filling out new ones or anything like that. You can get up to $200,000 with just a personal guarantee. There's no collateral for loans at $25,000 or less. If you're applying, you can also apply for an emergency grant of $10,000, and you can get that grant even if you don't get the loan itself. So again, if you're interested in that particular feature, the key point is to go to the SBA's website, sba.gov. And I would just to point out to people that this is where chambers and associations can apply for those types of loans. So all those features were in what Senator Blunt referred to as Phase 3 bill. There are still some elements in the Phase 3 bill that were carried over from Phase 2, in particular, the paid sick leave provisions. There are two things. First, the Fed will reimburse employers up to the daily maximum, which, as you can see there, is $511 per day if you're taking care of yourself, or 2/3 with a maximum of $200 per day if you're caring for a family member. The Fed will reimburse the employer up to the daily maximum you can pay your employees, and that's a refundable tax credit. That's an important thing. Again, that deals with the liquidity problems. Treasury is taking steps to allow an advance of that tax credit, so you have the resources to pay employees who are taking the sick leave. And then the third important point I want to make is there's an important qualification here. Businesses with 50 or fewer employees, seen in a lot of the coverage, are exempt. That's a little bit of an oversimplification. They are exempt from paid leave, but only if it's tied to school or daycare closures, and only to the extent that it provides the leave. My understanding is the Labor Department's coming out with more guidance on how that particular feature is supposed to work, so I'd encourage you to check that out as well. Finally, on the second feature that's carried over from the Phase 2 bill deals with family leave. And there you can see employees with less than 500 employees are required to provide up to 10 weeks of paid leave in addition to the sick leave. So the way that could work is if you find yourself in that kind of situation, you would be eligible for 10 days of sick leave first, and then an additional 10 weeks of family leave. And the family leave will be reimbursed by the federal government up to, again, the maximum. And then the same qualification applies to businesses with less than 50 employees, as long as they're dealing with a child whose school or daycare is closed. And I just want to point out that paid leave is not available if employees are teleworking. So, Matt, that's kind of a quick snapshot about how this would work. I would really encourage you, if you want more detail or have more questions, obviously you can contact us. But we have a lot of stuff on our website that I think answers a lot of the very more practical questions that people would have. So, having said that, tried to leave enough time for questions, so I'll turn it back over to you, Matt.
All right, Jack, thank you so much. And that's a lot of fantastic information and great job breaking each one of those parts down into a little bit more digestible process for everybody. And if you don't mind, and I want to let everybody know that we'll be loading this slide deck up to our website, to our COVID-19 resource page, so that if you missed something, you can go back and reread it. Jack, I hope you don't mind if we share that.
No, please do. We're encouraging everybody to do it.
Thank you. And we'd also, but while I still have you on the line, we did actually get a question. We got a question in and have maybe one or two questions for you. And I know you went over this a little bit, but a lot of the questions we're getting is, are there resources that are available, or is there a one-pager? The guide that y'all put out was wonderful. We already have that loaded up on our website. I've noticed a number of our financial institutions sending that out to their customers. A lot of people are using that. It's a great resource that really walks you through the process of how to be ready for the payroll protection program once that all unfolds and the implementation part is put in place. Is there a resource available right now that is a very bulleted resource, maybe that explains the parameters for keeping a small business loan forgivable? Those things that you went through quickly, which were the keeping your employment and such.
Yeah, I'm trying to actually. It's on our website.
Okay.
It's called the Coronavirus Emergency Loan Small Business Guide and Checklist.
Okay.
And it goes through in a lot more detail than I did. Kind of what the how you calculate the payroll costs, what's included, what's not included, what are lenders going to be looking for in terms of a good faith certification. So yeah, it's got, I would really highly encourage you to, I don't have the website itself here, but.
And we also have,
here it is, uschamber.com/CO.
Yep, and it looks like, and I appreciate Whitney, I'm sorry, Mary Kate, our communications director, just loaded that website up on the chat feature for everybody. So you can actually just, if you're on the call, on the webinar, you can just click there and it'll take you straight to the to that feature, to that guide. Jack, we appreciate your time, and again, we appreciate everything that the U.S. Chamber is doing. You've been such a wonderful resource for us that we've been able to rely on, and that many of our businesses, not only here in Columbia but throughout the nation, have been able to rely on. So please keep up the great work. We know that you are working around the clock, and you'll have a wonderful team doing it. So thank you for being such a great resource.
Thank you enough for your support either. Like
yes.
I said earlier, it's one thing for Congress to actually pass all this legislation or the Treasury Department to try to implement it. It's another thing entirely for the businesses out there to actually make this work. So that's really kind of the make or break out there, is how you all manage to, first of all, just stay in business yourselves, but also help the people you're dealing with stay afloat until we can get back on our feet here.
Well, thank you so much. And again, we'll have all those resources loaded up on our website, and we appreciate it. Sarah, I believe you're still on the call. Thank you so much for being here with us. We're right at an hour, so we're going to wrap up. And if anybody has any questions, they're welcome to reach out to us at the Chamber, and we will make sure to get those, work to get those questions answered and get that information out. Again, thank you to all of our speakers for taking time out of your extremely busy schedule. Please take a look, as this will be loaded, this webinar, and all the resources will be loaded up onto our COVID-19 resource page, which is at columbiamochamber.com. And you can also follow us on Facebook, Instagram, Twitter, and LinkedIn for continued updates. Also be watching for more business assisting webinars in the future. We're actually going to be holding one on this Thursday at 11 a.m. and we'll be discussing HR and legal advice for our businesses. And so we look forward to seeing you on that one. With that, thank you to everybody for being here, and please stay safe.